What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data, how those things have kind of developed through the end of the day on Friday, and what we're looking at going into this next week's trading week. It's going to be a big week. We are going to be receiving some statements from Powell that are going to be moving the market, so it's going to be a wild week. But the most important things that we need to discuss in this update is this situation surrounding Melvin Capital. We're going to kind of go through this situation in full, kind of the timeline of what's going on, because there have been some really interesting developments where Citadel and Point72, the two firms that were bailing out Melvin in January of 2021 and February of 2021, from their massive GameStop short. Now, the fact that this is happening now, and with the other losses that Melvin Capital has been taking, there's a couple of different things that could be happening here that I want all of you guys to be aware of. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting that information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, if you do want to learn that super powerful trading strategy, 1348, make sure you check out that link down below to the Discord. So we are going to be doing that live stream tonight for all of the premium members. So if you do want access to that, make sure you guys join up before then. So AMC closed the day on Friday at $14.30, down about 6%. We went over this in yesterday's video. Definitely not something that we really want to see. And again, with the overall market conditions right now, with Russia, inflation, rate hikes coming up, it's going to be very difficult for some of these stocks to get that move to the upside. But it doesn't mean that the overall thesis has changed. AMC is continually getting better fundamentally as a company. The short interest is still very high. And again, looking at that short interest, when we come over to this Ortex data right here, we see 100% utilization, which again, you guys have heard my thoughts on this before. I don't necessarily believe that that is necessarily accurate at all, but we are seeing the shares on loan go up, which is increasing that cost to borrow. We have 20.59% estimated short interest going into this next week's trading week. And the last time that exchange reported short interest data came out, we were seeing it at about 19.79%. But again, a lot of this data is self-reported. It's not entirely accurate. So what we're looking at here is essentially just the bare baseline minimum of what the actual short interest most likely is in a lot of these stocks. So I want you guys to keep that in mind. But let's think about what's going on with Melvin right now. So Melvin Capital, when we come over here, Melvin Capital is basically raising money for a new long-only fund, meaning that they're only going to be taking bullish bets on stocks. But what we've seen happen over the last couple of weeks and months from Melvin is a lot of losses have been coming through. Remember, they have a pretty big position in a firm over here, 3.2 million shares, and that stock, after their earnings, has been doing nothing but absolutely tanking. Again, if you guys were on the stream on Friday, there was about a 980% return on a put play that people were entering into based on those 1348 indicators. A firm has really been struggling. Now, again, when we take a look at Facebook over here, again, Melvin Capital also has a big position in Facebook. You guys all know what happened with their earnings and what's been going on with the overall market and Facebook over the last couple of weeks and months. So a lot of these stocks that Melvin is holding are taking significant losses, meaning that Melvin is also taking these significant losses. Now, let's kind of do a little bit of a timeline of the situation that happened last January on what has been going on with Melvin Capital. So what essentially happened is that once Melvin was kind of outed as this big short on GameStop and they were taking these significant losses, Steve Cohen's Point72, formerly SAC Capital, came in and injected them with about $750 million, as we can see here. Citadel came in with a bunch more money in order to try and bail Melvin out. Now, there's a couple of things that we got to look at here, but the one question that I want you guys to all keep in mind is something that I've been saying on the live streams is why? Why did Citadel and Point72 do this, give money to Melvin, and why did Citadel not come out and give money to Robinhood instead? Now, this kind of stems in what I think is going on here. So what really most likely happened is that the risk of these shorts that Melvin Capital was holding was then transferred to larger institutions, Point72 and Citadel. The reason why Citadel's getting involved is, yes, they could have been creating all of those short exempt shares when these stocks were going absolutely crazy back in last January and last June. but they were really taking significant losses on the options that they sold. What happens when these stocks start to run up is that these market makers who are essentially in charge of these options chains, they will then put out more strikes. So let's say that the furthest strike out on any given expiration date on a given stock is 100, but then we do what I would call run the chain and we go right through that. Well, these market makers are going to come out and start selling options higher than that furthest out expiration date, or not expiration date, the strike price, and we're going to see them try to rake in more money. But then remember what happened. The buy button got turned off. All of those options expired worthless, and they were raking in more money, trying to get back some of these losses. Now, when we come a little bit further, when we talk about these Melvin Capital liquidations, this is not the first time that we've seen this. We've seen Citadel start to do this, which we are going to go over, but this is the most recent development here. Steve Cohen's 0.72 to reportedly redeem $750 million from Melvin Capital. That's the exact same number that they gave Melvin back in last January and February to bail them out. So, if Melvin was offloading their risk to 0.72 and Citadel, well, there's a couple of different things that could be happening here. The bearish option is that they've kind of gotten this situation to what they consider under control, and they don't really need to have that money tied up with Melvin anymore. But what I think is a more likely outcome here is that Melvin has been taking such significant losses that the money that 0.72 and Citadel have given to Melvin in order to try and bail them out is now at risk because Melvin is taking such significant losses right now. Again, when we come over here and we take a look at what Citadel's recently done, Citadel is further paring back $2 billion Melvin investment. They were the first one out of the door here. Now, when you think about what kind of happens with the market and the flow of everything, the first one out of the door is always going to win. It's very similar to what we're seeing with kind of this short squeeze situation. The first one to cover is going to take the least amount of losses. So it's kind of like this Cold War situation where these institutions are kind of sitting around waiting to figure out which one is going to be that first one out of the door. So when we look at this situation right here, and we have Citadel is further paring back $2 billion Melvin investment, Melvin was taking significant losses. So when we take a look at what's going on here, there's a lot of bad things going on with Melvin. Now, one of the reasons Citadel is doing this is just like I said before, that money is at risk. Citadel in late January asked to redeem half of the money the firm and its partners have left in Melvin's hedge fund after originally having their investment late last year, as Melvin racked up double-digit losses for the second January in a row. And then coming back here, I believe it's this one right here, where Steve Cohen's 0.72 has opened to new cash and raised $1.5 billion after they provided Melvin with $750 million. This is very, very, very suspicious activity that these big institutions do have a lot of risk in these positions. Now, when we think about what happened when the SEC report came out about GameStop and a lot of these other stocks were kind of indirectly mentioned in this, they kind of said that there wasn't really a gamma squeeze and the shorts really didn't cover their position. So they're offloading their risk to larger institutions who can kind of basically withstand the margin requirements and withstand these wildly over-leveraged positions right now, but it looks like they could be kind of getting into that time period where they're going to make Melvin the scapegoat. Gabe Plotkin has really gotten himself into a very bad situation here where the people that are coming to bail him out and the people that were essentially his saviors last year could potentially be the root of their downfall in 2022. If they are holding anything still on their balance sheet and they are unable to meet any of these margin requirements, that honestly, at this point, I would not be surprised if these prime brokers start to forcefully liquidate them. We've seen many times in the past where, specifically in the Archegos situation and with this new situation surrounding nickel, where these big prime broker institutions are essentially not margin calling them. They're basically giving their clients some extra time in order to kind of meet these requirements in order to not cause massive turmoil in the market. But if Melvin's going to be labeled the scapegoat here, well, it doesn't really matter. They're going to try to basically liquidate all of these positions, offload the risk to somebody else, and clear it off all of their books. So that is going to wrap up this update on AMC and this whole entire situation surrounding Melvin Capital. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys bright and early tomorrow on the live stream.